Good afternoon. So I am Amber Moore with the Division of State Group Insurance. I am not Debbie Shoup, but I am on our member services team. So we're going to go over continuing your state group insurance benefits once you retire. And there's a whole lot. All of the information that we're going to go over pertains to retirees. So once you've walked out the door for the last time, not drop because everything stays the same during drop. This is once you've walked out the door and you're headed to the beach or the mountains or your couch or anywhere but work. So once your action is entered into the People First system, for those that are pension plan members, when you leave, you will be considered a retiree. Investment plan members, you're not considered a retiree until the time that you take your first distribution. Um, for our pension plan members, you'll be mailed a new retiree packet that will give you all of this information plus forms to complete if you're wanting to change any of your coverages. It's very important to keep your address updated in the People First system, not only for your retiree packet, but for annual open enrollment or any new things that People First or the Division of State Group Insurance may send you. So your health and life insurance coverage. You have to be enrolled at the time that you retire. So you have to be enrolled in health and or life insurance at the time you retire in order to keep that as a retiree. You'll automatically, for our pension plan members, you'll automatically be moved into retiree coverage at the time you retire. For your current health insurance, so it would be the plan that you're in and the level that you're in, either single or family coverage at the time you retire, you're automatically enrolled into retiree coverage. For life insurance, you're automatically enrolled into the $2,500 policy, and this is again for pension plan members. For investment plan, it works a little bit different because you're not considered a retiree until the time that you take that distribution. So you have to bridge that gap between leaving state employment and becoming a retiree by enrolling in COBRA. So you'll receive a COBRA packet at the time that you terminate, and you would enroll in COBRA to bridge that gap between the time that you leave and the time that you take your first distribution. And that's for investment plan members. Correct. If you're in the pension plan, you'll automatically roll over or be automatically enrolled into the plan that you're currently in as an employee. So PPO, I'm sorry. Yes, sir? Everything stays the same while you're in drop. So the PPO plan is administered by Florida Blue. PPO plan offers nationwide coverage. So if you plan on traveling after you retire or you're going to move out of Florida or out of the county that you live in, you can move to the PPO plan. And then the HMO plan, which in this area is Capital Health Plan, it'll function the same as it does as an active employee. When you move to retiree coverage, you'll still have to go in network, you'll have co-pays, that type of thing. So we still have standard plan and high deductible plan available to retirees. Same covered benefits as when you are an active employee. And then for those that are enrolled in a high deductible health plan, you have a health savings account or should have an HSA. At the time that you leave, you can continue to contribute to your HSA, but there's no longer any employer contributions to your health savings account. So the health plan types are also broken down into our early retirees. That is anyone that is not Medicare eligible. So you're either not 65 or you do not have a disability and are Medicare eligible. And then for our Medicare eligible members, those are broken down into Medicare tiers. So Medicare 1 is a single plan for you, the retiree, only you. And then we'll jump down to Medicare 3. These don't really go in order, but Medicare 3 would be a plan for you and your spouse, or you and there's only two on the Medicare 3 tier. The Medicare 2 tier would be a family plan for you, your spouse, and a Medicare or non-Medicare eligible child or dependent. Does that make sense to everyone? Okay. So, like I said earlier, pension plan members begin to draw their retirement at the time that they leave state employment. So, when your personnel action is entered into the system, it's entered in as a retirement, and you begin drawing your pension as soon as you leave or you need to in order to be eligible for state health coverage. For our investment plan members, when you leave, it's considered a termination until the time that you take a distribution or roll over your investment plan funds. At that time, you can enroll in state health insurance. Between that time is where you need to bridge that gap by enrolling in COBRA. So as a retiree, you can, when you retire, you can reduce your coverage to from family to individual coverage. You can cancel your coverage altogether and not stay with state group insurance. But if you leave, you can never come back. So if you leave state group insurance as a retiree, you cannot re-enroll at a later time. And you can change your health plan. So if you are planning to travel or you're going to spend 6 months of the year in New York and 6 months in Florida, you can change to the PPO plan, which is available nationwide. And if you are married to a state employee and you're retiring, but they're staying as an active employee, you can move under their coverage. And they would carry you as a dependent on their coverage until they retire. And they could still keep you, or you could move to your own plan. Any questions on any of that? So when you turn 65 or are otherwise eligible for Medicare, so if you become eligible due to a disability, Medicare Part A is free, and many times you're automatically enrolled into Medicare Part A. This would be hospitalization coverage. Medicare Part B is going to be medical services like doctor's appointments, x-rays, those type of things. And there's a monthly premium that's paid to Social Security. So either you send that to Social Security or it comes out of your Social Security check. Medicare Part D is a prescription drug benefit. If you stay with state group insurance, you do not have to enroll in Medicare Part D. The state's coverage includes prescription drug coverage that Medicare considers creditable coverage. If you leave state group insurance, you may have to enroll in a Medicare Part D plan. If you're still active at the time that you turn 65, you can actually defer enrollment. You don't have to enroll if you're still an active employee at the time that you turn 65. No, because you're covered by an active group plan, you can defer. So you'd want to contact Social Security and tell them that you are active, you're an active employee in a group health plan, and you want to defer Part B. You can do that until the time that you retire. Correct. Correct. Until the time that he retires. Any other questions? Medicare starts to get a little. So Medicare would pay 80% of your claims, and your state group insurance would pay the 20% of your claims. So Medicare becomes primary, your state coverage becomes secondary. Capital Health Plan works a little bit different because if you're a retiree that's Medicare eligible under Capital Health Plan, you have to enroll in the Medicare Advantage Plan with Capital Health Plan. The premium goes down, so you will pay a lower premium because the state is now your secondary. Medicare is your primary. Correct. Any other questions? Correct. And you want to defer Medicare Part B. So Part A, a lot of times you're automatically enrolled into. Part A is hospitalization and there's no premium for Part A. Part B, you'll start to receive mail from Social Security Administration 90 days before your 65th birthday. It's a good idea if you're still an active employee to contact Social Security and tell them that you want to defer Part B. Because your state coverage is going to pay at 100%. So you can enroll in Medicare, but why pay the Medicare premium if you don't need to until the time you retire? And B. So at the time that you retire, if you're Medicare eligible when you retire, your state group insurance, and you enroll in Part B, so you're going to enroll in Medicare Part B, your state group insurance is going to become your secondary. Medicare will be your primary. So Medicare is going to pay your claims at 80%. The state will pay your claims at 20%, plus your prescription drug coverage would be covered under the state as well. We'll get there in just a few minutes. That's the part where you're all going to start hating me. Hold on. Yes, ma'am? You can be penalized, but because you're covered by state coverage, that's why you want to contact Social Security and tell them that you're deferring Part B because you're covered under an active group plan. Correct. Correct. If you retire before you're 65, you should start enrolling for Medicare Part B 90 days prior to your 65th birthday. Yep, correct. And Social Security, as well as People First, will send you stuff 90 days before your 65th birthday. Any other questions? So, as we said, your state group coverage automatically decreases at the age of 65. State group insurance will become your secondary. Medicare is your primary. For CHP members, like I said, you have to enroll in the Medicare Advantage plan with CHP. And if you don't enroll in Medicare as a retiree, you're going to have a very high out-of-pocket cost because the state's only going to be covering 20% of your claims. You would be responsible for the other 80% of your claims. Correct. You can make changes during open enrollment as a retiree. So state group insurance would be your secondary coverage, paying secondary to Medicare at that 20%. There are Medicare supplement or Medigap plans that are sold by private companies. They may be less expensive than continuing your state group insurance. And when you're looking at those, you want to make sure that you're comparing apples to apples. And that those plans, and look at what's covered by your state group insurance and then what that plan covers as far as medical, prescription drugs, that type of thing. So when you're comparing the private plans that may be a lot less premium, you want to make sure that you're comparing apples to apples when comparing them to your state group coverage. So Capital Health Plan has their Retiree Advantage plan. If you're in Capital Health Plan and you're a retiree and you're enrolled in Medicare or you're Medicare eligible, you have to enroll in the Retiree Advantage plan. CHP, this is for all state employees. This ties in, again, Medicare and your prescription drug benefits all through CHP. At the time that you become Medicare eligible, either CHP will automatically enroll you into the Medicare Retiree Advantage plan, or they'll send you forms for enrollment. And you can contact CHP Member Services for any questions regarding the Retiree Advantage. Here's the part where you all hate me. So as an early retiree, if you are not 65 or otherwise Medicare eligible, this is your premium. So for single coverage in a PPO or HMO, you're looking at $763.80 per month. For family coverage, $1,719.32 per month. And that's for a standard HMO or PPO. So this is the total premium that's paid for you right now. So your employer is paying 80 to 90% of your premium at this point as an active employee. I know that we have that, but I'm not sure how many, because if you drop it, you can't come back when you are 65. There's a good amount. I mean, yes, ma'am. It really depends. So we've seen an increase every 2 years in the last couple of years. The premiums are set by the legislature. They're not set by the division or DMS. This year they went up. These premiums went up about $30 to $40 per month. And you can do that, correct. If you both were retirees or you were retiring at the same time, you can go into two single plans. It's a little bit cheaper premium wise to do that. Then you can separate into two separate plans. The big thing is keeping continuous coverage. So you, even though you went under your spouse, you were still continuously covered by state group insurance. So if you retired this year and he's not retiring for 2 more years, you go under him for that 2 years, and then at the time that he retires, you could split off into two separate retirees. Any other questions? Correct. Would get your health insurance subsidy. So the high deductible plan is that's the high deductible health plan. So you pay less in premiums and more out of pocket depending on your healthcare needs. You have a much higher deductible. Any other questions? The subsidy would go into is added to your pension each month. Correct. Correct. So drop your entire time in drop. Everything stays exactly the way it is right now. So all of these premiums and all of this is once you've left the building for the last time. Correct. Correct. Any other questions? Correct. So this is where you start to like me a little more and decide that you're going to stay till you're 65. So your premiums go down because the state is now your secondary coverage and we're paying your claims at 20%. So across the bottom is going to be Capital Health Plan. For a lot of you who have the HMO or who have an HMO, you're enrolled in Capital Health Plan here in this area. So Capital Health Plan for Medicare 1, remember, is just you. So that's just a one person. Medicare 2 is going to be you and a family where one of you is at least Medicare eligible. And then Medicare 3 is going to be you and one other person who are Medicare eligible. Correct. So your Part B premium, you would still be paying that Part B premium. For 2019, the general premium was $165. And that you either pay to Social Security or it comes out of your Social Security check. Any questions? The HDHP is a high deductible health plan. That is per month. Yes, ma'am. I'm sorry. It does not have to be you. It could be your spouse. So you could have a spouse that's correct because the state would be paying their claims at 20% and still be paying yours at 100%. Any other questions? You could, I mean, there are private plans that you can look into the marketplace. There are private plans, but again, you want to, there's any other? You would either have to have a qualifying status change event. So maybe you get married and then you want to add your spouse, or during open enrollment. So it's the same as if you're an active employee. You either have to have a QSC, a qualifying status change event, or during open enrollment. When you're Medicare eligible. Correct. So you could leave state group insurance and only have Medicare, but then you would need to either pay out of pocket for prescription drugs and that other 20%, or keep your state group insurance as secondary, or find a different plan that coordinates with Medicare. Any other questions? You can move to that other HMO. That's going to be the top. Correct. So that is your anything else except for Capital Health. And then you'll really like me even more. Here we go. So, Medicare Advantage and prescription drug plan. At the direction of the governor, the Division of State Group Insurance procured for and contracted 3 new Medicare Advantage prescription drug plans this year. They will be all new beginning January of 2020. I think it's in my hair. So these are Humana, Capital Health Plan, and United Healthcare. And the Capital Health Plan is a different Medicare Advantage plan than the Retiree Advantage. So you really have 2 options when it comes to Capital Health Plan. MAPDs are Medicare Advantage that includes Part A, Part B, and Part D, and coordinates with Medicare. These are only for Medicare eligible retirees that are currently enrolled in Medicare Part A and B. So you have to be a retiree, Medicare enrolled in Part A and B, and covered under state group insurance. And I think I covered it. So this is optional. You can keep traditional Medicare tier retiree coverage through the plan you already have. Florida Blue, Capital Health Plan Retiree Advantage, or if you're in another HMO, you can keep that. You can keep traditional retiree coverage, or if you're enrolled in Medicare and a retiree, you can choose one of the Medicare Advantage plans. There will be a new qualifying status change event. So in the event that you retire when you're 62 and you keep state group coverage for those 3 years until you turn 65, and you're in traditional early retiree coverage, and you want to move to a Medicare Advantage plan when you turn 65, turning 65 will be a qualifying event to allow you to move from your current coverage to a Medicare Advantage plan. As well as, if it's you and your spouse and you turn 65 before your spouse, and if there's two of you in the coverage, you both have to be Medicare enrolled in parts A and B to enroll in a Medicare Advantage plan. So if you turn 65 and then 2 years later your spouse turns 65, at that point you can then move into a Medicare Advantage plan if you choose. Correct. Correct. Yes. I'm getting there. So this is the map of the plan service area. So United Healthcare is the Medicare Advantage PPO plan, so it's available nationwide. Humana is going to be in all these maroonish colored counties. The counties that are gray do not have a Medicare Advantage HMO available. They only have the PPO. And then Capital Health Plan, just like with our regular coverage, covers the counties, few counties in the Panhandle. I apparently cannot move my head. So here's one of the advantages: lower premiums. So this is per member per month. So if you and your spouse are both enrolled in Medicare and you move to a Medicare Advantage plan, this is going to be per member. So you would multiply that times 2. What are the amounts? Okay, so for Capital Health Plan, it is $165 per member per month. For Humana, it is $40.47 per member per month. And for United Healthcare, it is $219.97 per member per month. United Healthcare. It does. Unless your dependent child is Medicare eligible. So the Medicare 2 tier does not apply to the Medicare Advantage plan. You would have to either be on single coverage, just yourself that is Medicare enrolled, or a Medicare 3 tier where you and one other person are Medicare enrolled. So there's differences, and I'm getting to the part where guys are like really excited. Okay, so Capital Health Plan Retiree Advantage Select is again different than the Retiree Advantage, your traditional Retiree Advantage. Um, Capital Health Plan does have information and a sheet that breaks down the traditional Retiree Advantage and compares it to this plan. So if you have questions about how these plans compare to traditional retiree coverage, you'll need to contact either Capital Health Plan, United Healthcare, or Humana. Neither the Division of State Group Insurance or the People First Service Center can compare these plans for you. Not necessarily. So the thing with Medicare Advantage plans and are they're huge groups. You see commercials all the time for United Healthcare, for Humana. They are huge groups that can negotiate their premiums. They can negotiate lower premiums, more in network. They're just massive groups, as well as our traditional retiree coverage, whether you're Medicare eligible or not, mirrors your active state employee coverage. There are things that can be offered to Medicare enrolled participants that cannot be offered to active people who are not Medicare eligible. So because of that, there's things that are added in that your traditional retiree coverage or active coverage doesn't cover because they're only available to that small Medicare population. For example, Silver Sneaker, Go 365 Wellness Program, which is offered by Humana, virtual visits, a well dine meal program. Those type of things can only be offered to a Medicare population, not to an active population. Yeah. So Silver Sneakers again, a $500 hearing aid allowance, vision coverage including $130 for eyeglasses or $175 for contacts, routine dental coverage, and a nationwide network of 65,000 pharmacies. Silver Sneakers is a wellness program that helps pay for gym membership. Any questions? You can, yes. Any other questions? And really the best thing to do if you're going to retire at 65 or older and will be Medicare enrolled in Medicare, or once you're retired and you're getting close to that, to call and to do your research and to look into the Medicare Advantage plan. Yes. I'm not sure exactly all that it includes. Our website is really great as well. So my benefits with an S .myflorida.com has a ton more information on everything that we've talked about today, as well as the Medicare Advantage plan. These are just some of the highlights of their plan. Yes, sir? Any other questions? Correct. And if you went to a benefit fair this open enrollment or you plan to go next open enrollment, they will all be there. And as a retiree, you can go to benefit fairs as well. And this is why it's so important to keep your address up to date even after you retire, because we're going to send you open enrollment packets that include where all of the benefit fairs are located. So you can go actually talk to these companies and get all of your questions answered. You have to wait till you retire or during open enrollment. And you have, so your active employee coverage, you pay a month in advance for coverage. So we're in November somehow. And so if you retired today, you would have your active state coverage through the end of December. So you would have that whole amount of time to contact people first or fill out your retiree packet or make whatever changes that you wanted if you want to move under your spouse. Just as soon as possible after you retire, but you have to have that qualifying event. And that will be included in your retiree packet when you leave that you'll get in the mail. And the forms are available on our website. So this was our first open enrollment, and there were a handful. I don't know the exact number of people that moved from traditional retiree coverage to a Medicare Advantage plan. Into retiree coverage. Correct. To do that. Correct. Correct. Just like if you got married, you can't add your spouse before you get married. So you have to wait until that qualifying event happens. Correct. Any other questions? Yes, ma'am. Yes, but you would pay that higher early retiree premium. Correct. Until you become Medicare eligible. And then health insurance subsidy, we did talk about that. So $5 multiplied by the total years of credible service up to $150. Yes, sir. Per month. Correct. If you have 30 years of credible service. Yep, submit the application. Any other questions? Yes, ma'am. Yes. So you would still pay your Medicare premium. Yes. So no, that's all together. So the Medicare Advantage and prescription drug plan is your medical and prescription drug coverage together. There's not a separate premium for prescription drug versus medical. No, it includes all of that. Correct. So you have to be enrolled in Medicare Part A and Part B. That's it. Yes. So you still have to pay your Medicare Part B premium that goes to Social Security. The state has nothing to do with your Medicare Part B, except for that we coordinate benefits. So you'll pay your Medicare Part B premium to Social Security either out of your Social Security check or by mailing them a payment. And then the Medicare Advantage plan, you would pay that premium either by it coming out of your pension or sending a check to the Division of State Group Insurance. Yes. Part D, if you were to leave state group insurance and enroll in a Medicare Part D plan all on your own, a private plan for Medicare Part D, those plans can range anywhere from $50 to $300, depending on the plan. Correct. So basically, you do not need to enroll in a Medicare Part D plan unless you leave state group insurance. Any other questions? Make it a little bit more confusing. Correct. I think people, I mean, it's insurance, so people get scared about insurance. One, it's who has their address correct and received the information letting them know because it's retirees. So, how many of the addresses were incorrect and they didn't know we have these new plans? How many are worried to change plans and maybe want to give it a year until and see how their friend likes the United Healthcare plan? Things like that. just to be more aware. With it being new and this is the first year starting in 2020, I would project that we would see an increase next year. Yes, Medicare Part B. And I think too, like you said, it's the difference between a Cadillac and a Chevy. I think even though it's not, a lot of people assume that because the premium's lower. So that may be why the enrollment wasn't astronomical this year as well. That's not a decision that we would make. That would have to come from the legislature. Any other questions? Yes, ma'am. You have to have a physical address in that county or within the counties that are correct. CHP will find out. And the only thing, if you were to travel for, 6 months or a year, the only thing that would be covered while you're gone are emergency services. Switch to a PPO plan. Any other questions? Okay, moving along. Oh, that I'm not sure. The best, so if you're thinking about one of the Medicare Advantage plans, I would contact them and ask them because they are different than a traditional plan when it comes to coordination of benefits with CMS, which is the Centers for Medicare and Medicaid Services. I would find out how exactly that works with TRICARE for Life and an MAPD. Anyone else? Okay, life insurance. So if you're enrolled in life insurance and you're in the pension plan, when you leave, you're automatically enrolled into $2,500 policy, which is $4.83 per month. You do have the option of choosing a $10,000 policy for $19.33 per month. You would either elect that in your retiree packet or call the People First Service Center to switch from that $2,500 policy to the $10,000 policy. And this is still with Securian, formerly Minnesota Life. Yes, you don't have to keep it. The 10,000 is the maximum for retiree coverage. So they do offer an accelerated death benefit as well as a can't say that word benefit, which means that if you are 75 miles away from home and you pass away, they will pay to get your body back home. I hate saying that, but that's what it is. So over 75 miles away from home. Yes, ma'am. You cannot. Any other questions? Yes, ma'am. It goes until the time that you either drop coverage or drop yourself. It's a lifetime benefit. There's no good way to talk about life insurance. And a reminder to update your beneficiaries. I cannot tell you, it's more than I would like to admit number of times that someone gets divorced and does not update their beneficiary. They get remarried and they pass away, and their ex-wife of 10 years gets all the money, and the new wife is pretty not happy. So just make sure that you update your beneficiaries all the time whenever you have a big life change. Correct. So the MAPD plans are still state group insurance plans. So if you move to one of those and you don't like it and you want to move back or vice versa, you can do that during open enrollment. You're not leaving state group coverage. Only if you leave state group coverage can you not come back. Dental and vision, we do not offer dental and vision benefits as a retiree. Your only option would be to COBRA those. The monthly premium is the same as you would pay for your dental and vision now, plus a 2% administrative fee, and you can COBRA those for up to 18 months. At that time, you can reach out to the plan and see if they have any private plans, something like that. So accident, cancer, disability, all your other supplemental plans, um, you would have to, a lot of them have conversion privileges. Some have age limitations, so you would want to contact those companies individually at the time you retire. So if you have a, hospitalization plan or a cancer plan with Aflac, those type of things. So paying your monthly premiums. If you are a pension plan member, you can have your premiums pension deducted. But for your first premium, you always want to send that premium either by check or money order to the address that will be in your retiree packet or located everywhere on our website. If the payment is not received by the last day of the coverage month, your insurance coverage will be canceled. If you are canceled, that means that you dropped coverage and you cannot re-enroll. So make sure that your premiums are paid on time. Because if your coverage is canceled for non-payment, your coverage is canceled and you cannot come back. Yes, it does. Your banking institution may have a bill pay system. So you don't have to be old to be forgetful, because I forget things all the time. And sending that check every month if your pension is either not large enough to cover your premiums, or if you're an investment plan member, you can set up bill pay with your bank and they'll send the check for you each month and you don't even have to think about it. You want to make sure that your People First ID number is on your check, money order, or cashier's check, so that PSGI and People First know whose $1,700 premium payment we're getting and where to apply that to. So healthcare FSA or limited purpose FSA, you can only expenses incurred before your last payroll deduction are eligible for reimbursement. And then you can file claims for those up until the IRS filing deadline, which is usually April 15th of the following year. You can also use your leave balance to fund the rest of the year on a pre-tax basis, or you can write a check to fund the account, and there's a healthcare and FSA form when employment ends that you would want to fill out at the time of your retirement. Your benefit card, if you do have a healthcare FSA or HRA, is deactivated upon your retirement. So you would have to submit your claims via the mobile app or paper claims online. Dependent care FSA ends the same. This you cannot continue. This would end the date of your last payroll deduction if you have a dependent care FSA. Health savings account, like we said earlier, you would keep your health savings account. You can continue to make contributions, but no state contributions are made once you retire. We do have a surviving spouse benefit. So if your spouse is covered under your health plan at the time of your death, your surviving spouse and your spouse's eligible dependents can continue health insurance. So if your spouse was, you covered your spouse the whole time you were a state employee into retirement, they never worked for the state, you pass away, your spouse can enroll in surviving spouse coverage, as well as your eligible dependent. Yes, ma'am. Does not remarry. So this So you can only keep this. There's some rules to this. They have to submit the application within 60 days of the death. Submit any underpayments within 31 days of the enrollment. They have to pay the premiums by the 10th of the month for the next month's coverage, and they cannot remarry. So they can live in sin for the rest of their life and keep benefits, but they cannot remarry. It would be the same premium that you were paying. This is as a retiree. So they would either pay the Medicare premium or the early retiree premium. Yes, yes. So they will have an ID created for them. They will have a People First ID, and instead of saying retiree or what have you in People First, it will say surviving spouse. Any other questions? Yes, ma'am. Yes. So when you're in drop, everything works just like you're an active employee as far as benefits are concerned. Any other questions about surviving spouses? So making changes after retirement. As a retiree, you can reduce or cancel your coverage at any time. Remember, if you cancel, you cannot come back ever. If you cancel coverage for any reason. Um, and like we said, that includes not paying the premium. So if you're canceled due to underpayments in your premiums, you cannot re-enroll. You can make changes to your plans during open enrollment, and you can make changes to go up in coverage throughout the year. Just like anyone else, you can make a change if you have a qualifying event. So if you get married, if you get divorced, those type of qualifying events. If you get married and divorced or divorced and married in the same year, you can change it up. And then the shared savings program. So as long as, and you may have heard of the shared savings program as an active employee, this is something that started last year, and that the Division of State Group Insurance has pushed really hard. So we have contracted with Healthcare Blue Book and Surgery Plus to offer you a transparency portal to search for shoppable healthcare services like an MRI, a CT scan, things like that. You would use Healthcare Blue Book. You would go in and search for those. If you use a green provider or green facility, you could be eligible for a reward. The state is saving money and rewarding the employee for making smart healthcare decisions. It's applicable to everyone who's enrolled in a health plan. Your doctor, so if you go to the doctor and your doctor says you need an MRI, I'm sending you here. Your doctor may not care how much that costs. So you're going to go out and look at Healthcare Blue Book and say, and a lot of times, especially in this area, your doctor's already referring you to somewhere that is a green facility. So by you going and shopping, you get a $100 reward for that MRI just because you went and searched and went to that green provider that you may have already been going to go to. So your claim, so you go to the doctor, he tells you you need an MRI, you go out and search, you go to TOC, which is a green provider. Your claim comes to the Division of State Group Insurance. That goes to Healthcare Blue Book. Healthcare Blue Book says, yep, John Smith searched for an MRI on 11/2. He went on 11/4 to a green provider. He gets a reward. A green is a high quality, low cost provider. And then Retiree Plus would be the other. All of the shared savings program is available on our website as well. Chart Snyder would be where your reward would go, either into a healthcare FSA or an HRA. You can use your rewards for things like dental, vision, prescriptions, any of those eligible expenses that fall under an eligible expense. So dental, vision, anything like that. Have I searched? Oh yeah, I search everything. So it depends on, I have not personally had to have a procedure. I'm sure that there's someone here who has that can tell you. Lydia? And the rewards for healthcare for Retiree Plus range up to $5,000. And that's a bundled surgical service for a non-emergent surgery from pre-op through 90 days past your post-op. Into an HRA or FSA. If you do not have a healthcare FSA or an HRA and you earn a reward, Chart Snyder will automatically open an HRA for you and send you a welcome packet with a little debit card that you can use your rewards fund. Not on anything you want to. It has to be an eligible expense. And the entire list of eligible expenses are located on our website. So if you know that you wear glasses and you need a new pair of glasses, you can use it for glasses. You can use it for prescription drug copays, doctor copays. Your kid may need braces. I mean, there's a ton of things that can be used on. Fillings, yep. The only types of things that can't be are cosmetic procedures, teeth whitening, colored contacts, that type of thing. You can do this now, and it is as long as you're enrolled in a health plan through the state, you have access to the shared savings programs. Healthcare Blue Book has an app. Anytime that I even think of something that I may ever get done, I just search it because it's really fun to find out what the reward would be. You have to do these things anyway. So one, it makes you more knowledgeable of the cost. You're saving the state money by going to a high quality, low cost provider, and the state is sharing in that savings with you. Yes, ma'am. You don't have to enroll in it. If you're enrolled in a health plan, the vendors already have your information. So you would log into Healthcare Blue Book with your People First ID and your date of birth. Yep. It would go to an HRA. Correct. So as long as you continue to be enrolled in a state group insurance health plan, you have access to this program. Yes, ma'am? Nope. You have to search before you go. You could be sitting in the doctor's office waiting for them to call you back, and as long as you search before the Before the procedure, you would be eligible for a reward as long as you do go to that green provider. Then you can, so if you look it up and where your doctor wants to send you is not a green provider, you as the patient can say, I don't want to go there. I want you to send me here. Correct. So you would tell your doctor, I can earn a $150 reward if you send me here. I want to go there, not there. Correct. Yep. And I mean, you as the patient, and a lot of people don't realize this, that you do not have to go where your doctor tells you to go. You can go where you can tell the doctor where you want to go. So, I mean, if you know whether you're getting an MRI or a colonoscopy surgery, so you can ask the physician what the specific name of the surgery is. Yes, sir. Yes, as long as your dependent is covered under your health insurance, your spouse, child, anyone who's a dependent. Yes, yes, and the reward would come to you. So you get the reward for her colonoscopy. Any other questions? Yes, Healthcare Blue Book is tied to your network. You always want to make sure before you go somewhere that they are definitely in network, but it's tied to your insurance coverage. So when you log into Healthcare Blue Book, it knows that you have CHP. So it's going to show you those in network facilities.